Hello and welcome. You're watching Talking Point and I'm Mahima Vajrajani. Well, one stock that is in focus on the back of Q4 earnings is electronic marts, where the revenue has grown by 14.8% YOY, EBITDA has grown by 18.4%, margins have improved a tad bit from 6.8 to 7.1%, and net profits have grown by 12.2%. They've added around 12 net stores in Q4, and the same store sales growth in Q4 stands at around 7.3%. But to break down these numbers of Q4 and how the FY24 has shaped up, we have with us Mr. Premchand Devarakonda, CFO of Electronic Mart, who joins us now. Pleasure having you on the show, sir. My first question to you is that, the same store sales growth has come off sequentially. In Q3, it was around 13%, whereas right now it stands at around 7.3%, and overall for FY24 it's around 8.4%. So my first question to you is to understand that why is there this big a drastic change in same store sales growth?
See, during the third quarter, it was a festive season. What happened last year, that is in FY23, the festive season was split between second quarter and the third quarter. Whereas during FY24, the entire festive season fell in the third quarter. So as a result, we could see a significant same-store sales growth when you compare quarter on quarter. So otherwise, there is no abnormality in this growth rate. So if you look at overall growth rate, we expected between 9 and 10% of same-store sales growth. I think we are more or less close to that.
Understood. And from a long-term perspective, where are you expecting this same-store sales growth to be? Because a lot of your stores in NCR will now be maturing, coming towards the break-even. So is that 9 to 10% is what you're guiding towards, or you're expecting more in FY25-26?
Okay. Let me throw some light on this. In Hyderabad region, where we have almost more than 50% business is happening. So already we had what are the benchmark we said, or the base is quite big as compared to other territories. So in Hyderabad, we cannot expect huge growth in the same store sales, because year on year it will be between 5 and 8%. Whereas in the new territories, we are going to achieve double-digit same-store sales growth. So that is possible. And the blended SSG will be close to 10%.
Understood. And when you say double-digit, can you define that double-digit to be? Can we expect around 15% of same-store sales growth then?
When we compared Q4 versus Q4 of Delhi, it has been almost 30% SSG, because Delhi is new market for us, and there we could see 30% growth. Whereas in the established markets, it is in APA and rest of Telangana, it is around 15%. So blended is coming to 8 to 9%, and in future also it will be around that.
Okay. So blended margins in FY25 will stay at around 8 to 10%. Okay, understood. And, in terms of your average ticket size, I want to understand what is happening there, because, even YOY average ticket size has gone down by 2%. So is this on account of discount, or how is that shaping up?
See, it is not because of discounts. The main concern is you're asking about average ticket size, no?
Right, correct.
So average ticket size has gone up. If you look at the overall, for the year, it is up by 2%. It is not down, actually.
No, when I checked your annual report, if we compare Q3 FY23 to Q4 FY23 to Q4 FY24, it's down by 2%.
Okay. When I look at the
right.
full year picture, there is a growth. But if you look at Q4 versus Q4, there is definitely little dip in this, little drop in this, and which is negligible. And the main reason is there are more, and the average selling prices of certain products has come down. So because of the technological advancements, the previous models are sold at the discounted price, and that is not going to be the scenario in future.
Understood. And then, going forward with everything in place, what kind of top line growth are you expecting in FY25 in terms of percentage?
It will be around 15%. So we have to achieve that to make it more sustainable business.
Okay, and in the next 2 to 3 years, what kind of revenue potentials are you expecting? Because, a lot of new stores in NCR you've opened, you're planning more stores going ahead. So what is the kind of revenue potential in the next 2 to 3 years that, is there on your radar?
Yeah. See, our target is we have to grow at a pace of 15% year on year, and that is going to be the scenario for next 3 years. So with that target, we are moving ahead.
Understood. And for margins, you had guided that, they'll stay around 7%. So your margins are pretty much in line with what you had guided. But going forward, do you see any kind of margin expansions? Again, because of a lot of your stores will be coming to break even. So one, are you expecting any kind of margin expansion? And if yes, what do you think will be the levers for this margin expansion?
See, we cannot expect any abnormal or growth in these margins because historically also, if you maintain that 7%, I think we are on track. So that is to be maintained, and that is also our target for next 3-4 years. Until unless we have any new product with huge gross margins is introduced by brands. So otherwise, the margins will more or less remain the same.
Understood. And you had also guided that you plan to add around 25 stores in FY25. Do you still stick to that, or has this number increased from 25?
It has gone up as per the recent business plan discussions. So we are going to improve on that number. But for the time being, let us stick to the 25 figure. So hopefully we'll cross that.
Understood. And my last question to you would be that, how does the competitive scenario look like with, with all of these players, organized, unorganized players shaping up? Where do you see the competition going?
See, competition was there. It is here. It will be there in future also. So we have to live with it. And it is, in fact, each player is getting his share in the market. So I think I don't see any threat from the competitors, as well as we are not a threat to our competitors.
Well, understood. Point taken, Mr. Devarakonda. Well, thank you so much for taking our time and speaking with us at NDTV Profit.